So I have covered ACB in few of my earlier videos, and the reason I wanted to update is has to do with the cannabis sales that has come out for the July of 2020 number. It's a couple of days older news, but and in light of that those numbers, let's see how ACB looks like, which has came down to $6.53. And frankly, because I own a lot of these shares at an average price of maybe around $10.50, so I'm losing like $4 in for each cent for a number of shares. So but I still see it as the low price. My analysis should still stay. I mean, the stock could still keep doing down, but I'm going to try to be as honest as possible in the light of those news that's coming up about. And I believe that this price is probably rational. It's not underpriced. It's probably not overpriced. And depending upon how the future sales figures come about ACB, the price can stay same or can go further down. So looking at this July 2020 number, it's very positive, because if you look at compared to the June's number, it's for overall for across the industry number. It's from $201 million to $232 million. It's almost like 15% every month. And that's a very big number, because even if you look at the previous month's increase, that's only $15 million, or that would turn around maybe like 8% or so. So this 15% number, and because the May's number was only a little above the April number, which was in turn only about the same as the March number. And the last time we see that kind of jump was between February and March, and that was not stable, because people, because of the pandemic, they tried to capture whatever was available in the stores and then stock it. So this seems to be positive, but that doesn't necessarily translate to an ACB all the time. And to do that, you need to look at these numbers here in these 3 months. You see that 150 and 50, 180, and these numbers are much higher, like 10% or so. But ACB actually, it's what it gave an indication, its quarterly sales are actually going to be down from $75 million to $72 million. And remember, these are Canadian dollars. So, but that doesn't matter for our relative analysis. And to understand these numbers, you need to go back to ACB's commitment to reduce the cost. So ACB, it made a 25% reduction in selling, general and administration costs. And anytime you are doing that kind of thing, there is a collateral. So you reduce your headcount of your sales team, so obviously your sales are going to be affected. Now you reduce only the sales persons that do not bring a lot of revenue, but nonetheless whatever that small number is, that is going to be affected. And that's how I personally can feel the reduction in the number from 75 to $72 million. If they had kept those, if they had not reduced this headcount, those numbers should actually have been closer to $80 million, and that would have looked more reasonable and would have followed the pattern. But there could be other factors that I do not know, but that's what my guess is. Now that we have provided a base has been established at $72 million, and with that, whatever personal here, and the company is operating with those reduced head counts. Now with those sales number, in general picking up, with those same head count, they now should be able to grow up in this quarter from $72 million to some higher number in July to September quarter. Unfortunately, ACB said that its EBITDA, earning before interest, depreciation, and whatever amortization, that includes all those things. So earning before taking account of those things, they are still not going to be positive in this quarter, which means that its quarterly sale is going to be falling somewhat short of $80 million that's required to achieve a positive EBITDA. Now, moving into the next quarter, there is a possibility of having this positive number, positive growth number, positive uh, um, profit numbers. We expect that it's going to take some time before we start seeing this ACB price move up. So you will need to be very patient about it, at least for the next 2 quarters. At the same time, what I would say is that this $75 million is actually, you can think of 55.5 American dollar, US dollar, and because that's how it relates to the share price. So if you look at this 55 US dollar, it's close to like $220 million of annual sales, which should, by a price factor of 3, translate into about $660 million, and that's where the market cap stands at $733 million, slightly overpriced. So expect it to fall down to something like $6, but the moment it hits $6, it's probably a very fair price where you could expect to, or you should buy those stocks at that price. That being said, I would say that the Wall Street likes to see this sequentially growing number, and from 72, unless it grows higher and keeps the momentum going for at least 2 quarters, we should see the number going much higher. For example, the next quarter it shows like maybe 78 or 79 million dollar, and next to that it's like 85 million dollar. At that point of time, the prices could shot up, in actually it could overreact to as high as like 16 or $17, so, and maybe more. So this is about my feeling about it. The stock market sometimes overreacts, sometimes underreacts, or sometimes it when it's down more than what is expected. So you could see this price going down to $5.5, because people think that why to jump in now when there is no chances of any growth for the next 3 months or next 6 months. So that's how this things moves. I personally have invested some of my money at a higher price, and I hope that it's going to take. I'm patient about for it for the next 6 months or so. Thanks for taking a look.